Welcome back to Investing Talk Podcast.
Today we're looking at IREN.
As usual, before we start, subscribe, like, and comment to this video to support the show. We really appreciate it, and it helps us get these analyses out to you faster.
All right, let's get into it. We are talking about IREN, which, used to be Iris Energy. And honestly, calling this just a company update is a massive understatement. We're watching a total identity shift happen here, in real time. This company is going from a pure-play Bitcoin miner to a high-performance AI cloud provider. It's like watching a caterpillar try to become a butterfly while flying through a hurricane.
Oh, okay, let's unpack that immediately because I have to inject some skepticism right off the bat. Transitions, pivots, those are often just fancy words for messy and expensive. Because you look at the headlines, and sure, there's a lot of hype. Everyone wants to be an AI company right now. But the stock chart, it just took a massive hit. So is this a brilliant pivot, or is it just panic?
That's the right question. But here's the so what and why we're talking about them. This isn't just a crypto miner throwing up a new PowerPoint deck. This is a company that just locked in a $3.6 billion financing deal with Microsoft. And they have a war chest of power capacity that is, frankly, almost impossible to find anywhere else.
$3.6 billion with Microsoft.
Right.
That definitely grabs your attention. I'll give you that. It's hard to ignore a trillion-dollar partner.
Yeah.
But the valuation is all over the place. I'm looking at these charts and wondering, are we catching a falling knife? Or is this a golden opportunity?
That is exactly what we're going to figure out. Let's dig into the numbers.
All right, let's bridge into the fundamentals, because this is where the rubber meets the road. And honestly, looking at this recent earnings report for Q2, it's not pretty on the surface. If you just glance at it, it looks bad.
It's complicated, I'll admit, but bad is relative.
Well, let's look at the data. Revenue came in at $184.7 million the previous quarter, $240.3 million. That is a significant drop. That's a sequential decline. Your top line is shrinking. That sets off alarm bells.
It shrinks because of the pivot. You have to
Right.
contextualize it. That decline is a direct result of the strategic shift we just talked about. They are literally switching focus from Bitcoin mining, which is immediate cash, to AI cloud.
So they're unplugging the money printers.
Essentially, yes. That dip you're seeing is the friction of the transition. They're taking miners offline to make room, reallocating that power to high-performance computing. It's messy, but it's purposeful. You're trading today's Bitcoin revenue for tomorrow's AI contracts.
Okay, a hit now for a bigger payout later. What about the annual picture? Does that look any better?
Much better. If you look at the full year, revenue hit $688.5 million. And get this, net income was over $523 million, so the annual engine is still humming.
Okay, but let's go back to that quarterly symbol. It wasn't just revenue. The bottom line took a beating. A net loss of $155.4 million. That's a lot of red ink.
It looks like a lot, but we need to dissect why. It's not like they just lost that money. A huge chunk of that, $219.2 million to be exact, was in unrealized losses.
Oh, the non-cash nasties. Let's explain that for our listeners because it can be confusing.
Right. Unrealized losses basically relate to assets they hold, like Bitcoin on their balance sheet. If Bitcoin's price drops during the quarter, they have to report a loss on paper, even if they didn't sell anything. It's an accounting rule, not cash leaving the bank.
So it's paper noise. It vanishes if the price goes back up. What about the hardware? I saw something about impairments.
Another $31.8 million was in mining hardware impairments.
Which sounds like corporate speak for our equipment is worthless now.
Close. It means they're writing down the value of their old Bitcoin mining rigs, the ASICs, as they swap them out for GPUs.
Let's pause there. ASICs versus GPUs. Why does that matter?
An ASIC does one job perfectly, mining Bitcoin. It can't run ChatGPT. A GPU is what you need for AI.
Yeah.
It's flexible. As IREN gets rid of the ASICs for GPUs, they have to take that financial hit. But again, it's accounting noise. It's a strategic upgrade.
Fair point. But let's talk liquidity. If you're buying all these new GPUs, you better have a deep savings account.
Oh, they do. This is what I call the cash fortress. As of January 31st, 2026, IREN is sitting on $2.8 billion in cash and equivalents.
$2.8 billion. Okay, that is substantial. That's buy a new power plant money.
It's massive. And year to date, they've secured over $9.2 billion in total funding. They are absolutely flushed with capital. They are loaded for bear.
I looked at the debt profile, and I'll admit it's manageable. Debt to equity is 0.34. and their current ratio is 5.52.
Which is incredibly healthy.
Yeah, right. For our listeners, that means for every dollar of short-term bills they owe, they have over $5 in liquid assets to pay it. So, I reluctantly admit, liquidity isn't the issue here.
Not at all. And that's what fuels the forward guidance. This is the exciting part. They are targeting $3.4 billion in annual recurring revenue by the end of calendar year 26.
Wait, $3.4 billion in ARR? That's a massive jump from under $700 million. How?
By expanding to 140,000 GPUs. That's the scale of the supercomputer they're building.
140,000 GPUs. But they all need power. What makes IREN special compared to, say, HGT8 or Cipher?
That brings us to their competitive moat. The real asset here isn't the chips, it's the plugs. They have data centers in Australia, Canada, and now this new 1.6 gigawatt campus in Oklahoma.
1.6 gigawatts. That is a lot of power.
It's huge. Their total grid-connected power is over 4.5 gigawatts. You have to understand, the bottleneck in AI right now is power. It takes years to get a new substation built. IREN already has the connection. That is a massive advantage.
Now, the thesis is the chips are a commodity, but the power socket is the monopoly.
Exactly. And that $3.6 billion Microsoft deal, that's the validation. Microsoft did their homework. They know the power is real.
Okay, the fundamentals are fascinating. Big cash, big promises, messy earnings. Let's pivot to the charts and see how the market reacted. Because usually the market hates messy.
It wasn't pretty, was it?
Pretty is not the word. Carnage is closer. Post-earnings, shares plunged 11 to almost 19%. The stock landed around $39.79.
That's a steep drop.
It is. And the 52-week range is just wild. It's been as low as $5 and as high as 76. Imagine that range. If you bought at 5, you're ecstatic. If you bought at 76, not so much.
True. But even before this drop, the one-month return was up over 24%. This stock moves fast.
You're not kidding. The beta is 4.27.
For our listeners, explain what that means.
It means IREN moves more than 4 times as intensely as the S&P 500. The S&P is a cruise ship. IREN is a speedboat in a storm. This is not for the faint of heart.
And we saw that intensity in the trading volume, too. Over 57 million shares traded on that drop, way above the average.
That signals massive churn. The weak hands, maybe the pure crypto investors, are selling. And maybe new AI investors are buying. It's a battleground stock. But what's the upside case on the chart?
Well, despite the drop, the analyst consensus is still a moderate buy. The average price target is $69.36.
So it's trading at $40 with a target of 69.
Exactly. That implies about a 74% upside. It suggests the market might have overreacted to the earnings noise.
Okay, technical scream volatility, but the target scream buy. Let's move to market perception, to the vibe, because sentiment drives price.
And the narrative battle is in full swing.
I was reading the headlines, and it's a complete mix of fear and greed. You see things like caught in the eye of the AI storm and AI jitters shake tech sector. It sounds like the sky is falling.
But then you see a bull case theory, and why the AI transition still isn't fully priced in. It's schizophrenic.
It really is. The quantitative sentiment scoring is neutral. The market is just waiting. And to be fair, IREN wasn't alone. AMD took a big hit recently, too.
Right, about 14%.
So IREN is getting dragged down by broader AI fears. Plus, Bitcoin retreated to 74,000. When Bitcoin drops, the miners drop.
It's guilt by association. But look at who's holding the stock. Institutional ownership is around 41%. That's a healthy chunk of smart money sticking around.
41% is decent. It shows the big players aren't bailing.
And I keep coming back to it. The Microsoft deal is the ultimate sentiment anchor. Microsoft does not sign deals worth $3.6 billion with companies they don't trust to execute. That's a stamp of approval.
It's a valid point. But, and you knew a but was coming. Let's look at the risks before anyone gets too excited.
Let's do it. What's your biggest worry?
Execution risk. Plain and simple. The Q2 miss was real. Revenue missed expectations by a lot. Earnings per share missed by 45 cents. Those are ugly numbers.
They are relative to expectations.
Exactly. And this AI transition is incredibly capital intensive. It's also operationally much harder than mining Bitcoin.
How so?
If a Bitcoin miner goes offline for an hour, you lose an hour of revenue. No big deal. If an AI cloud service for Microsoft goes down, you have angry customers, broken contracts, lawsuits. If they stumble on deploying those 140,000 GPUs, that $2.8 billion cash pile will burn very, very fast.
That is a legitimate risk. Deployment at this scale is never seamless.
And then there's the identity crisis. I call it correlation risk. IREN is trying to say, hey, we're an AI stock now, but the market still treats it like a Bitcoin miner.
We saw that clearly. When Bitcoin dropped, IREN fell right with it.
And that double exposure is dangerous. If the tech sector sells off, IREN gets hit. If crypto sells off, IREN gets hit. You have two ways to lose.
That's true. However, I'd argue the cash buffer mitigates the survival risk. The stock price will be volatile, yes, but with $2.8 billion in the bank, they aren't going bankrupt because Bitcoin dips. The risk is volatility, not insolvency.
A fair distinction. Insolvency is unlikely, but pain is probable. So we've looked at the messy transition, the volatile charts, the confused sentiment, and the very real risks. It's time for the final judgment.
I'm ready.
What's your bullish score?
I'm giving IREN a bullish score of 8 out of 10.
8 out of 10. That's high, given everything we just discussed. I was expecting a 6, maybe a 7. Convince me.
Here's the thesis. It's an asymmetric bet on infrastructure. AI demand is exploding. The scarcest resource isn't the chips. It's the power to run them.
And the place to put them.
Exactly. IREN has over 4.5 gigawatts of power capacity. That's an enormous moat. They have the Microsoft deal paying for the hardware. And they're targeting $3.4 billion in ARR by 2026.
So you're buying the roadmap?
I am. The current sell-off, with stock around $40, offers a discount for a company with a $69 price target. The market is pricing it like a struggling miner, but the fundamentals are building a massive AI cloud provider. That gap is the opportunity.
It's a compelling argument. The upside is mathematically huge if they hit that target. But I have to remind everyone listening, the volatility is real. This is a multi-year hold, not a quick flip. You need a strong stomach.
Absolutely. This is for the patient investor who believes in the AI infrastructure story.
So keep your seatbelts fastened.
Definitely. And keep an eye on the next earnings report in late April or May. We need to see proof of that AI revenue ramp.
We'll be watching. Subscribe, like, and leave a comment telling us if you think the AI pivot is real. We want to hear from you.
Thanks for listening.
See you next time.